If your family contributed funds to a 529 plan, which is a qualified tuition program to save for education expenses, at some point, you will withdraw the funds when the beneficiaries attend a qualified institution like college to cover the costs. When you withdraw money from 529 plan, you will receive a tax form 1099-Q, which reports the withdrawal amount, earnings, and the principal, basically the basis in the plan. You usually don't need to report 529 withdrawals on your tax returns as long as the funds were used for qualified education expenses. So let's take a closer look at our 1099-Q and figure out whether we need to report it on our 1040 tax return. At the top, we have a payer name, which indicates the institution where we have our 529 plan. Recipient is most often the beneficiary of the 529 plan, so probably the student, whose education expenses were covered by the funds. In box 1, we see that $5,000 was distributed from the plan, of which $500 was in earnings listed in box 2. That means that the funds grew by $500. We originally contributed $4,500 listed in box 3. This is our basis and what we put into the plan. None of the $5,000 is taxed if the funds have been used for qualified education expenses. Now, which education expenses can you pay with 529 funds? A lot. You can pay for tuition expenses and room and board, books, supplies, computers. You can also use these funds to pay for trade schools and certifications, so not only college. Additionally, since 2017, you can also use 529 funds to pay for K-12 education costs, although not all the states allow it. Finally, since 2019, you can pay for apprenticeship programs and pay up to $10,000 of the beneficiary's student loans. Withdrawals from 529 plan account can be taken at any time for any reason. But if the money is not used for qualified education expenses, federal income taxes may be due on any earnings withdrawal. A 10% federal penalty tax and a possible state tax deduction repayment can also be added, except when due to death or disability. See Publication 970, Chapter 7 on Qualified Tuition Program for more information. Now, why you may have to pay state tax deduction recoupment? There are 37 states plus District of Washington that offer state tax deduction or credit on 529 contributions. Many range from as little as $1,000 for a single taxpayer to maximum of $20,000 for joint filers. Plus, some states offer state deduction up to the full amount of contributions. So if you receive state deduction for these contributions but didn't use them to cover education expenses, you may have to pay back the deductions on your state taxes. Going back to our example, you have to make the calculations yourself of how much of the distribution was used for qualified education expenses. Let's say that all the funds that you received as distributions were used for qualified education expenses. Then you wouldn't even have to report the 1099-Q on your taxes. However, if some of the funds were not used for education expenses, then you would have to include that amount as other income on Schedule 1, Line 8. Thanks so much for watching.